Hey guys, Sam here, Wednesday the 20th of September. Hey, we are coming up to some key levels here in both Bitcoin and Ethereum, so I thought we'd take a look here and see if there's anything setting up or anything we can learn from what we're seeing. Now, the two are moving somewhat differently, so we have different setups in each of these cryptocurrencies, and it's somewhat interesting. So I'm going to start here with a Bitcoin, and this is the 60-minute on Kraken. That I trade it there very often, so again, just in the interest of mixing it up, I thought we'd take a look here on Kraken. Now, take note of a couple of things here. So, just just here in the last day or two, we've come up and we've challenged this wave, what we have currently labeled as the A wave of this corrective action. Now, when you see that, okay, number one, I can tell you that doesn't happen by accident. Okay, so that's significant. So we have to pay attention to that for the following reason. We cannot rule out the possibility that this correction is not over yet. We can't rule it out. And this is just adding fuel to that argument, if you will. Because we have this possibility here. Right? This may not be an ABC, and the fact that we didn't overlap the one wave here, again adds credibility to that point of view, if you will, to that technical bias. All right. So if you think the market has Bitcoin has one more leg down to either test this low or test the lows on a larger level, then this is a very valid case. I cannot make an argument to counter that. Technically, that's you've really got a strong case for a sell there, and really a rather nice risk reward there. Right? If that's the 4, it's a deep 4, but we hold on the 1, we got a long way potentially down. That would put us at a minimum below 3,000, and we're sitting at 4. What do we have? 4,000 right now. All right, but we're bulls, and we are operating on the premise that what we've got, if I can get rid of this bias. Okay, we like the possibility that that this correction low is in, and we're starting back up the other direction. Okay, well, if that's the case, what can we deduce? Well, if we're doing that, then here's our swing low. Here's our first 1. There's our 2. Well, that theoretically that could be the 3, could be. Now, remember from our rule set, one of the primary rules of Elliott trading theory is that the third wave cannot be the shortest wave. So if we are going to come up here and break this, then this 5th wave cannot exceed the length of the 3rd wave, because right now the 1st wave is the longest. So still potentially, and what would we have here because of the overlap of the wave 1 high? We'd have a leading diagonal, which can only be found in a 1 wave. And so we'd be operating on the premise that what we've got here is a big 1, and here's a 2, and now we're going off to the races. Okay, that's the bullish case. Where does that invalidate? Well, if we're going to maintain that we've got a 1, 2, 3, 4, 5 leading diagonal, that invalidates if this move here exceeds the length of the 3rd wave, making wave 3 the shortest wave. That count cannot be right. Can't be right. Could we still have a bullish case here? Yeah, we can. So let's look at that. Remember, it's waves within waves. So if that's the case, then we've got a 1. This is our 2. And our 3 is going to be way up here. That's the bull case. Well, so how does that work? Well, we know. Let's go back to what we've been learning over the last couple of days in our Elliott training. Well, what do we know? The most likely distance for the wave 3 is up to the 1618, between the 1618 and the 175. That's our most likely case. Well, then, if that's the case, well, we got a lot of work to do here, but we've already had a little retracement here. So if that's going to play out that way, hang on. If that's going to play out that way, it's got to look like this. Let me change the color here. Let's go to a white. Then what we have happening here is a 1, 2, 3, 4, 5. That's the bull case. That we've got 1, 2, 1, 2, right? Which you can make a very strong case for that. Just look at the fib retracement. Okay, we come right to the 50. How beautiful is that? Right to the 50. So if you're a bull, there's the trade. There's, you know, we've got our very short-term target being the negative 23. The next one, the negative 61.8. You know, if we're going to go all the way up here in this structure, remember it's waves within waves. So we measure here. Okay, so we get a nice little window up here, a little target on the smaller degree. Do you see how we're in a smaller degree? We're carving out 5 of this, what may be the third wave impulse. So we need to see an impulsive wave within that third wave. So very, very real roadmap here is that we've got a 1, 2, 1, 2. And now we're heading up to that, you know, the most likely target here. But we have potential. We have potential for this secondary target here, which is perfectly valid. We could see the third wave move to at least 100% of this wave 1, right? That validates it, right? So we know we likely have a wave 3, and we come to the negative 618 off of this fib pole. So that's one target, second target, long up, big target up here at 50, 57. Lots of nice targets. You got to have a target when you're trading, so you know when you're when you want to take profit and what your risk reward scenario is. So that's you know, perfect trade. Absolutely right to the 50 and you're off to the races. You already got some profit, so the stop could be moved to break even or a few ticks below your entry, a few ticks below the 50. Very, very real scenario. Keeping in mind that until we break this low here, we can't disqualify the potential for this to be a 1, 2, 3, 4. 4 is in, and now we're just carving out. See, where this could go the other direction. If we take that off, we still have the potential. We still have. Let me get all of this off here. For this to be going the other side, the other direction, where we'd have 1, 2, 3, 4, 5. We still have that possibility. We can't rule it out. How do we rule it out? Well, if wave 2 can't exceed more than 100% of wave 1, that would be the first rule out, increasing the probability that this is a second wave. Or a fourth wave, right? It could be one or the other. We could have that shorter fifth. So these are all possibilities that we have to allow for. We have to allow for it in the Elliott count, right? Your fib trader, you're just ripping off the 50, heading up to the negative 618 or the negative 23 as a minimum. Okay, so but this is going to be a critical level here. Can we get through that? You know we've got stiff resistance there because of this providing the support when we were coming down. Right, critical level in Bitcoin coming up. Once we get clarity here, then we can approach the market with more certainty about what we have, where our targets are, where the entry points are, where the risk is, everything that we're waiting for. Until then, we sit tight. Sit tight on Bitcoin. Now let's take it over to Ethereum and look, because it's a little bit different on Ethereum. Now, right now in Ethereum, we're still on Kraken. This is the 60-minute on the dollar. Let me take some of this off so just I can build this case for you. Okay, so we've just like Bitcoin, we had the big ABC correction, but take note here. We have now broken through what we have currently labeled as the wave A low. We're through it, unlike on Bitcoin where we have not broken through yet. So Ethereum is looking more bullish. So if our correction is complete and we have a 1, here's our nice little 2, potentially the 3, right? We got to pay attention to that. You can see it here. So we get the 1, we get the Elliott oscillator showing us this is the strongest wave here. That's the likely 3, and perhaps we go up and we make a 5. Okay, wave 3 it currently shorter than wave 1. So we got to pay attention to the length of this fifth wave here as to where that might ultimately go, because just as with Bitcoin, this could potentially be a 1-2-1-2. And we're going much higher. We can't discount that. But again, here's where the rule set of Elliott helps us quantify what we're seeing, so that we can have a strict method and an approach, because we have a rule set that helps us quantify the chaos. Right, so we can look at that and know when we change from a fifth wave to a 1-2-1-2. Right now we've got a fifth wave, and what gives validity to that argument here? Notice that the fourth wave here comes just a few dollars from the one wave, increasing the probability that that's a fourth wave, not a second wave. Highest probability right now is to be long off of that, and of course, you can expect that there was good fib here. Right, we come to 38, which is also the most likely retracement of a wave 4. We hold the wave 1 and we're moving higher. Most likely path here is to that level there. Right, that's our most likely, and of course we know we're going to hit some resistance on the way back up. We got to retrace the entire thing, and look what we're going to run into right here. Okay, big wall of fib resistance here. We got the 618, we got the -23. We know algos that took the 38 here. There's going to be likely profit taking, so we've got this little target here, and this is, I encourage you to do this. Draw these little squares up on your chart, because that way, if you start taking things off, you can kind of leave that there, and you know that that's going to be a key level. You can stretch it out if you want. So you've got potentially a key level, and we want to see what likely happens there, because now if we can quantify that, what's the next trade? Well, we're looking for this. We're looking for the 2. Remember, we're trying to trade 2s and 4s. So we want to see that target hit, and then we want to set up for the next retracement of that 2 wave, giving us the big swing up into the 3. That's what we're hoping to see in Ethereum, right? But different. The key difference being that we've already taken out the A wave low in Ethereum, unlike Bitcoin. All right, so it's going to be very interesting to see what happens over the next, of the remainder of this week as we come up and challenge these levels. Okay, definitely time to pay attention, because opportunity is coming. All right, guys, I'll wrap it there. Back to you soon.